Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, folks, into the action we go today on this Tuesday, January 14th, 2014. It's a little after 2:15, and again, we're looking at a market that is having a buy-the-dip snapback rally. So S&P 500 up 15 points, Dow up 76, NASDAQ up 58.5 points. And again, markets have recovered about two-thirds of the drop from yesterday. Now you might say, is this bullish or bearish? I am going to explain that right now. Overall, it's good to see the markets bouncing back, but it is not a bullish sign. Why not? Well, let me just explain this as simply as possible. Yesterday you had an epic event, a big down day, biggest down day of well over 1% on all the indexes, I think in multiple months, definitely since the beginning of the year. All right? The only way you look at this as a negation of the negative from yesterday, I repeat, the only way you look at this as a negation of the event from yesterday is if we come up and close above yesterday's highs. All right? If you close above yesterday's highs, then essentially think of it like wiping the slate clean. Investors, the mentality, the emotion of yesterday's big fall will be wiped away from the mind. As long, I repeat, as long as you do not take out this high here and you're trading inside yesterday's down move, it is a negative still to the markets. Not to say that the bounce itself is a negative, it's just the market has to be looked at as having a negative bias or a bearish tone to it. So short term over the next few days, all I want you concerned with is the high from yesterday on the SPY, which was 184.20, we'll call it, 184.20. If by chance you get through that high, all I want you to do is then focus on this high at 184.69. All right, so again, you get above this high right here, you go into a neutral bias. If you get above this high right here, you go into a slight bullish bias. As long as we remain below this high, I have a negative or bearish bias on this market. All right, hopefully that's crystal clear. I think I explained it pretty nicely there. And you can see how the markets are stalling now and actually starting to come in a little bit. So I'm telling you right now, this market is far, I repeat, far from being out of the woods from more downside. All right, you're going to continue to have buy-the-dip mentality. It's just the nature of the beast. The average investor, the ones that always are left holding the bag, they've been programmed at this point to buy the dip. Every dip, buy it, because otherwise you're going to miss the next up move. That's the mentality of the average investor. I know better. I know to be cautious here. I talked about this yesterday. I'll say it right here in this video. If you overlay the chart of the Dow up to current times from the last few years, and you overlay it with the Dow from 1928 to 1930, identical charts. In 1930, Dow dropped approximately 30+%. All right, that bothers me that the charts are almost identical. All right, literally the daily charts are almost identical. It is a scary thing to see. In addition, you have to look at the cycles. All right, we've been a proponent of cycles for a long, long time. It's how we called the 2007 financial collapse. All right, these type of things you have to pay attention to. Look at the market and the distance in time or in years of 93-94, from 1993 to 1994 to 2000, which was your last mega run from again, it was leading up into the dot-com bubble, from 93 to, say, 2000. Now, take that difference in years, which is 7, and add it from 2000, and what do you get? You get 2007, the next start to the big collapse. All right, so 7 years between. So you basically have a sell-off and a move back up that encompasses approximately 7 years. All right, and again, from 93 to 2000, from 2000 to 2007, take that same year amount and add it to 2007. What do you get? 2014, right? So from 2014 into 2015 is what it really is. That bothers me as well. All right, and again, think about all the things that are going on here. The Federal Reserve has made it clear per their last week's minutes from the previous meeting that they believe that more QE is not going to help even if we get a weak jobs number because they think it's now hurting more than it's helping. So they're going to continue to taper. Think about the market like a drug addict. Drug addict who continues to get an infusion of drugs by them printing money and it keeps going in. Well, as they withdraw that, how does the drug addict behave? All right, gets pretty upset, right? That's the market. So these type of things to me put me on extremely high alert for potential major downside. Now again, could it be 2 months from now, 5 months from now? Who knows? I'm just putting you on notice at this point that you have to be saying to yourself, where's the risk? Is there risk in me being long or is there risk in me being short? And in my opinion, could you get a couple percentage points to the upside? Sure. Maybe the market goes up another 5-10% this year in 2014. Maybe. It's a long shot, but maybe. But then what are you risking? All right, to maybe get 5% on the upside, what are you risking? 10, 15, 20, 30% to the downside? Doesn't make sense in my opinion. All right, and again, just think about the money flow coming in from the average investor. All right, over 2013, inflows into mutual funds, which is only average investors, which we know are always wrong in the long run, they've been at their highest level in years. The average investor finally feels okay to put money in this market. Ding, 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 red lights should be flashing. Be cautious when that happens. All right, across the board, I could look at anything out there. There are signals to be cautious. Doesn't mean the market's going to collapse tomorrow. My point is, you just need to be aware that this market does have a murky, gray, ugly future, and it's just a matter of time now. Just a matter of time, and I mean short time too. All right. Going into a couple other charts today. Yesterday, Google bought out a company for $3.2 billion. The stock is having a great day today. Interestingly enough, look at where it went. Yesterday's high, and it kisses that high today, right there. That's awesome, actually, just to see how that works. Great fall yesterday, and sure enough, it goes right back up, and now look at the pullback. So this is called a double top, where you hit yesterday's high. So yesterday made a pivot high. Today you touch it, that's considered a double top, and you look for a pullback off of it, and the stock is giving it to you. All right, so the little things like that, as a trader, I'm always aware of. Today, Tesla, because of some news, is having a great pop today. And again, nice move on Tesla, up $15 and change. JCPenney's bouncing back. That's one of my favorites out there right now. Looks very, very good. Amazon had a big fall yesterday, but rebounding. Notice how Amazon has not gotten back to those highs. So, we saw Google get back to those highs, but not Amazon. All right, I am bearish on Amazon overall. It's a nice bounce back, but again, considering the way the chart looks on Amazon in the markets, I'm still bearish on Amazon overall. JPM had earnings this morning. Stock is barely doing anything. All right, they basically came in line, as did Wells Fargo. JPM up 9 cents right now. Wells Fargo is down 7 cents. So you can see basically flat there. We get more bank earnings the next few mornings, but keep in mind Intel reports after the bell tomorrow. That's a big one. All right, today I think Intel was upgraded. So the stock's trading up $1. That is most likely factoring in some of earnings. So there's less upside potential because of the move up today and actually more risk to the downside. All right, based on the upgrade, I mean, chances are they're not going to do too poorly, but I think a majority of the upside, maybe get another dollar on earnings, but possibly even downside. There's no way I'd even think about owning it into earnings just because of that alone, because of the move up today. All right, Chevron's down 3 cents. Exxon's up 25 cents. Take a look at gold. Gold's had a little bit of a pullback today, down about $1. But in all fairness, should we be surprised? No. I mean, it's into the 50 MA. It needs to consolidate again. And I actually think gold will continue its move up. It just needs some time to digest the gains. USO oil having a good bounce. Take a look at that little pivot low trend line. Nice bounce off of that after piercing it yesterday. And again, I would be surprised if oil has a little bit of gain over the next week or so. Just a little bit more upside to it. All right, anything else I want to bring up? Apple is having a decent bounce today, AAPL. If you go to the Apple Daily, notice how you're back above this trend line, but it's already been broken. All right, so this trend line originally to me was a big deal when we were coming into it. As soon as you closed below it, I went basically neutral to negative. And now you're back above it, but notice the 20 is resistance right here. Overall, I'm still negative on Apple. I actually think Apple's going to turn around and start heading lower. The fact is, it just had a nice fall, so it's kind of trying to consolidate those gains before further downside. All right, one stock we scalped here a couple times today was ICPT. You can see a bunch of lines there that signal scalps, but just so we can see the chart better, let's flip it over here. And again, I pulled out some nice gains on this one. And looks like it was halted there for just a little bit, which is kind of weird. But in any case, the stock came down here. You might want to wonder why it bounced right below the 200 here. And I'm going to show you right here. Take a look at this, guys. Gap window. Look at that. So it doesn't look like a big bounce, right? But that bounce was a $20 bounce. So if you're even playing 100 shares, you can make 500, 1,000, 1,500, 2,000 bucks very, very easily. This stock again was a near $500 stock a few days ago. Came down to sub 250, and now it's getting a little bit of a bounce back. I actually think, based on this level, it probably continues to bounce a little bit as long as it doesn't get below this gap window. Once it gets below that, then the bottom can fall out of it. But short term, anyways, I think it continues to do pretty well. All right. Let me see what else is going on here. If there's anything else on the radar. Some small caps are moving again today, but nothing outrageous. Canadian solar stocks doing pretty well. And I think that's about it for today. So, bottom line is, guys, just going back to the SPY, let's bring that chart of the S&P back up, tracking ETF, getting a little bit of an inch up here. But again, all you need to care about is this high from yesterday in the short term, and then the all-time high at the double top at 180.469. Those are the two lines you're looking at. Remember, as long as you stay below this high from yesterday, bearish. If you get above it on a closing basis at the end of the day, then neutral. And if you get above the all-time highs at 184.69, that's slightly bullish. That's very simply how to read this market from a technical perspective on the charts. Take care, guys. Come join us here at InTheMoneyStocks.com. Take the 7-day free trial to the Research Center. Start profiting with the pros.